Hi everybody, this is Andrew Masters and you're listening to the Market Watch Review. In today's release we'll cover the following topics. How the head of the RBA does not consider the Australian dollar overvalued, a general increase in interest in risk, the level of business activity in EU countries, and a reduction in gold prices. During the opening of the Pacific trading session, we saw a fairly strong price gap for the Australian dollar US dollar currency pair. The opening price was substantially lower than the closing price on Friday, and as a rule, many traders prefer to buy in such cases in order to make money on the close of the gap, which happened today. The Australian dollar received additional support at the time of the speech from the head of the Reserve Bank of Australia, who noted that currently the Australian dollar is not overvalued. He later stated it would be nice to see the Australian dollar lower over time, but traders continue to buy the Aussie paired with most currencies. Since the opening of the markets, the Australian dollar US dollar currency pair has strengthened by 75 points, while the Australian dollar Japanese yen currency pair has grown by more than 100 points. Moving on to the European trading session, I note the absence of important macroeconomic publications, which will also be the same situation during the trading in the US session, so volatility may remain moderate. It is important for traders to monitor the emergence of information on statements by representatives of major central banks, as well as on any changes in the conflict between the United States and China. It's worth noting that the demand for risk has grown markedly and the so-called fear index has returned to the red zone, losing more than 4% at pre-market. As a result, we see an increase in commodity currencies and a moderate decline in gold prices, which also confirms the increased interest in risk. In this case, the US dollar will lose ground as it partially serves as a safe haven asset. Since there are no important publications today, I'll draw your attention to the upcoming release on the report on changes in the level of business activity in the manufacturing sector as well as the service sector in major European countries. The appearance of optimistic forecasts regarding growth of business activity, especially in the services sector, may provide significant support to the European currencies, as well as the Australian dollar and New Zealand dollar against the backdrop of an increase for interest in risk. As a result, we are seeing a moderate decline in gold prices. I will draw your attention to the fact that sellers managed to return to the technical level of $1,760 per ounce, thereby increasing the risk of a further decline to $1,730 and further to the psychological level of $1,700 per ounce. The bearish scenario will be relevant until the price returns above $1,760. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.